So, so look, investors, in my view, Bitcoin and gold are really two flavors of the same trade. One, they're both sound money. Gold is analog sound money. Bitcoin is digital sound money. They both are sovereign currencies that cannot be printed by government. That's why in a time when governments being as irresponsible as ours are being, these are the safe havens. Okay. Gold is the ancient version of it. And some people shit on it, but they shouldn't because it got us this far. And before 2008, it was all we had. And it has the advantage of being very widely distributed and having a fraction of the volatility of Bitcoin.
Bitcoin has been having a rough time lately. It dropped sharply after setting a new all-time high last month. This pullback is a reflection of market jitters and lessening excitement about institutional ETF inflows. The asset is now trading at a crucial level after losing key support, indicating a possible short-term shift in momentum after a year of extreme rallies and volatility. Even though things are rough, investor Lawrence Lepard is still very bullish. He points out that Bitcoin was near its all-time high just a few weeks ago and is now around $113.70 after falling below $100,000. He sees this as one of the best times to buy in years and is taking action by selling his gold-related positions to buy more Bitcoin, calling the trade obvious and straightforward. Even more dramatic is Lepard's prediction that Bitcoin will have a fierce awakening within the next 1 to 6 months, potentially skyrocketing from $120,000 to $250,000 or even blasting through $400,000 in a rapid catalyst-driven surge. He thinks this will be driven by rising public awareness of ongoing monetary debasement and the growing need for sound money alternatives, which will allow Bitcoin to wake up from its slumber and charge forward like a lion finally stirred awake. To put this in context, let's go back to his interview, where he talks about why he thinks today's value is wrong and reveals the hidden mechanism he believes will start Bitcoin's next parabolic run.
And, I'm sure a lot of Bitcoiners and people listening to this are frustrated that Bitcoin's price hasn't moved. But first of all, let's consider that Bitcoin's done pretty well. I mean, last summer it was at 60. It's 106 now or whatever. It hit 126, whatever. It's still up quite a bit. That's better than the stock market.
Yeah.
And there's a big history. And if I don't have a chart that I can refer to here, but maybe you'll pin it in the notes after the show, I'll send it to you. There's a large history of gold smelling debasement first, because it's more widely held. Everyone knows it, knows what it is. And Bitcoin, a little bit more narrow, a little bit more risk on, a little bit more specialized group of people that hold Bitcoin. And it wakes up later, but then it goes harder. And so the classic example of this, that's really laid out nicely on this chart, which you'll pin, is that in 2018, 2019, when, there was the repo blowout and there were a lot of kind of monetary events that kind of led people to know he's going to have to pivot and print. And they didn't know COVID was coming, but you could see it, and gold was marching up nicely. Bitcoin was flatline, right? And then COVID hit, and gold went up a lot on COVID. Bitcoin was still flatline for 3 to 6 months. There was kind of a lag, and then one day Bitcoin woke up. As the chart shows, gold and silver reacted first, and Bitcoin sat really dormant for a long period of time, and then it really woke up. And this reminds me very much. There's a great video of Christopher Walken talking about how, the lion sits around and lets people kind of play in his sandbox for a while. And then at some point he just wakes up and gets pissed off and goes down and just kills all the hyenas. And that's what happened in 2020. Bitcoin was kind of locked in at $10,000 into, and gold was going up, and everyone's like, how come gold's moving? Bitcoin's not moving. What's, this digital gold, it's not working. Remember that? I remember it. All my friends were like, what's going on? What's going on? I was like, just wait. And then suddenly Bitcoin went from 10 to 60.
Yeah.
In a very rapid period of time. It did a 6-packer. Okay. So it feels where we are today right now feels to me like the exact same thing.
Yeah.
Gold's moving, gold smells it. The print's coming, the debasement's coming. Okay. Bitcoin, okay, a week or two ago we're at 126. We're not that far off the all-time high. We're at 106. I look at it today, and honestly, I'm selling gold-related things to buy Bitcoin-related things because it's such an easy and obvious trade.
Yeah.
Because in my opinion, what will happen is sometime in the next 1 to 6 months, and I can't say when, because nobody ever knows, but if Bitcoin's going to wake up and like that lion, it's going to be pissed off. And it's going to go from 120 to 250 for starters, and maybe much higher, maybe through 400. I think 400 is possible. I'm not saying it'll stay there forever, but I'm just saying it's gonna be pissed off. It's gonna really run hard. You can see that it's coming. Monetary debasement is entering the mainstream, and I think a lot of people, there's another point I would make that I think is an important one to understand. There are a lot of people calling me and say, gosh, gold's up so high now.
Yeah.
We've got to sell it.
Yeah.
We've got to sell it. And
what's too high?
Well, that's that. Thank you. You're my straight person. Thank you for asking the question, because we talked about this earlier. What is too high? I mean, yes, it's a lot higher than it was, but measured against what? And that's the important thing to consider. If you consider all the fiat currency that's been created over the last 50 odd years since we went off the gold standard, it's enormous. I mean, to go to 100% coverage of the monetary supply of the United States with the gold that we currently hold, the 261.5 million ounces that we'd have to be at $90,000 an ounce. We're not, we're not, right. That's how much money, which isn't, it's not as much a statement about gold. It's just about how much fiat money we've created.
Canada sold all its gold. Could you imagine?
Right. So, and the point is, you don't need to have 100% coverage.
Yeah.
Okay. And that's not going to happen. Okay. I'm not suggesting, but you're still right now at a level at 4,000 where you're way below the mean coverage over the last couple hundred years in societies that had gold as a part of their monetary system. And so, to my way of seeing it, 4,000 gold could easily double and still kind of in the fairly valued range.
Recent changes in the gold market have made investors realize they may not have enough exposure to the metal. Gold-related stocks and indices have gone up more than 120% year-to-date, far exceeding the market's modest 14% rise or even Nvidia's impressive 38% run. This performance chase is being driven by ongoing money printing and growing economic unease. Big banks like JP Morgan now call this move the monetary debasement trade. This story is making both gold and Bitcoin look like safe havens from weakening currencies, like in the 2019 to 2020 cycle when gold rose early during repo market stress while Bitcoin stayed capped near $10,000 before exploding sixfold. Even though the price of gold at $4,000 an ounce is making headlines, it is not that high when compared to the decades of fiat growth since the end of the gold standard in 1971. If current reserves were used to back up the entire U.S. money supply, gold would be worth about $90,000 an ounce, and even a move to $8,000 would just bring the ratios back to what they were in systems that were based on gold in the past. As things change, gold and Bitcoin are becoming less of competitors and more of safe havens against government overreach. Gold is the stable, lower volatility analog store of value, while Bitcoin offers the high-octane digital upside. This gives investors who don't want to take risks a choice that is similar to the classic balance between safe bonds and ambitious growth stocks.
So look, investors, in my view, Bitcoin and gold are really two flavors of the same trade. One, they're both sound money. Gold is analog sound money, Bitcoin is digital sound money. They both are sovereign currencies that cannot be printed by government. That's why in a time when governments being as irresponsible as ours are being, these are the safe havens, okay? Gold is the ancient version of it, and some people shit on it, but they shouldn't, because it got us this far, and before 2008, it was all we had. And it has the advantage of being very widely distributed and having a fraction of the volatility of Bitcoin. A big down year in gold is 15%. We all know Bitcoin's had much larger corrections than that. So
we just had one in one day.
Right. So for those people who are kind of thinking, I don't like corrections, I'm willing to sacrifice the upside in order to protect my downside, gold fits. I mean, I have some very old clients who, they own a little Bitcoin, but they own a lot more gold. I get it. And there's a reason for that. So, if you're, in the way I've kind of, in the modern world, I kind of look at it a little bit as like gold is your bond. It's not sexy, but it's not going to lose value. And Bitcoin is your growth equity. Yeah. It's going to outperform it massively, but at the price of higher volatility. So, but yes, I mean, I'm a profit maximizing individual and I hold both. I always have held both. And, I rebalance a little bit from time to time. I mean, when I think gold is cheap, I mean, I haven't really sold much Bitcoin, but if I thought gold were stunningly cheap relative to Bitcoin, I would sell some Bitcoin and buy gold. And in turn, what I see going on right now is gold's run pretty hard and some of my stocks have run really hard. And it's very easy for me to say, you know what, I'm going to sell a few of those stocks and buy some of this Bitcoin, which has not run hard, but is about to. That's all I'm really thinking. And I'm talking about adjusting at the margins, not wholesale changing my investment strategy.
Yeah. And you've got a quarterly report coming out.
I have a quarterly report. Yeah. So my partner, David Foley, and I, we manage a fund that invests in gold and Bitcoin. He also manages the Bitcoin Opportunity Fund, which focuses exclusively on Bitcoin. He does that with James Lavish. And basically the gold fund that we manage, we write a quarterly report and it's free. and it's on our website, ema2.com.
I'll link it.
Yeah, you can Google me. And it basically is, it's long, but it has a lot of charts, and everything I'm talking about here explains in greater depth our thought process to how and why.
Yeah.
We're still, this is the important part, Mags, we're still really, in my view, kind of in like the third inning of this monetary debasement trade, if this is a 9-inning baseball game. I mean, yeah, it would have been a lot better to buy gold or Bitcoin 2 years ago, no doubt. I mean, gold was, half its price today. Bitcoin, there were times, I mean, the real time to buy Bitcoin was after Sam Bankman-Fried was at 15. I mean, what an amazing sale that was, right?
Yeah.
But the point is, you're still, a lot of people, and I have a lot of friends, clients, others who come and say, gosh, I'm too, I get it. You're right. Everything you say is playing out, but it's too late. I feel like I'm paying too much.
Yeah.
And I kind of come at that from a different point of view. I'm like, well, no, these are your safe havens, and you can't pay too much for a safe haven. And it goes back to that. And this, we were talking earlier about gold, and is the price of gold too high relative to other things? This, in my view, what's going on is there's a secular and fundamental shift in the landscape. And when that kind of thing happens, you can't just go back and assume you're going to kind of revert to the mean. And so I see fiat currency is in real trouble based on the confidence of governments, confidence of people in their governments to control the printing. And as a result of that, I think we can run very far in both these directions. Now, let me just give you the cautionary note on the other side of that. And I always say, because I come and invest in me and they ask me my opinion, what could go wrong? Because I really hate seeing people lose money, and I hate giving people advice that causes them to lose money. What could go wrong is the government gets responsible. Now, I say that and people laugh, but stranger things have happened, right? So I'm watching like a hawk.
Okay.
I mean, if suddenly I saw, the government saying, we're going to cut the defense budget, and we're going to means test Social Security, and we're going to make the retirement age higher, we're going to trim all the Medicare. I mean, if the government actually really began to behave in a truly responsible manner, then okay, maybe this trade isn't as good as I think it is. Although even that, I think at this stage, we're probably too far gone. The debt is too big, and it's so overwhelming that if we do what I just described, we'd also have a big economic downturn. And that downturn would lead to bigger deficits, and those deficits would lead to more printing. So I kind of feel like we're in a damned if you do and damned if you don't condition with the government. And so that's why I wrote the book, to try and warn people about that.
Yeah.
And to try and suggest that you got to protect yourself. I mean, there's a way. I mean, this, people say, you're an old guy, and they accuse me of being a doomer because I'm forecasting some stuff that's not going to be pleasant for the United States, right? We're going to have very high inflation. We could have a punk economy. I mean, and when these things happen, people get hurt. I mean, in 2008, people got hurt.
Yeah.
And we could have something similar to 2008 or similar to the COVID experience. And, but to me, it's just analysis. I'm just looking at the facts and saying, look, guys, the math is the math. This is what's likely to happen. So and that was the first part of the book, how we got here, why it's broken, how I analyze the situation. Second part of the book is, okay, that's bad news. Here's the really good news. There's a way you can solve this, right? Don't sit there like a bump on a log. I mean, get up and do something to protect yourself.
Yeah.
Because I sincerely believe that in 5 years, the people who do the right things are going to be in a much better position than those people who are asleep and aren't paying attention to it. So,
Lawrence Lepard warned that London's physical silver reserves now only back about 7% of all outstanding claims. This creates a musical chairs situation where there are many more paper promises than actual metal. This is also a problem with gold, where the LBMA's official 10-to-1 paper-to-physical ratio may be closer to 100-to-1 when global off-book positions are taken into account. Like Satoshi Nakamoto, Lepard said that central banks routinely flood markets with unbacked paper contracts during rallies, working together through the BIS, major banks, and offshore funds. They don't care about making or losing money because they can just print more fiat. This strategy has kept gold well below the $90,000 per ounce level needed to fully back the U.S. money supply and stifled what would have been a clear inflation alarm otherwise. When he talked about Bitcoin, he said that futures markets create paper BTC in the same way, letting sellers promise coins they might not hold and calming down spot prices. He pointed out that Binance Perpetuals recently hit $16 billion in open interest compared to $20 to $30 billion in daily spot volume, but he thinks this is nothing compared to gold's huge paper suppression and that Bitcoin's decentralization will stop any long-term control. He said that silver was the unruly outlier of precious metals because it had lost a lot of its historical role as money as the gold-silver ratio grew from 15-1 to almost 100-1 and then slowed down to about 80-1, in part because India and China were less dependent on it. Now that we're done, the question is whether Bitcoin bounces back hard off the $100,000 support like it has in the past or falls toward the $94,000 area if the bearish RSI stays below 30. Let us know what you think in the comments, hit like, and subscribe for more.